When you turn age 71 and are required to change your RRSP account into your RRIF account, it can be a very confusing time on what's required, what you need to do, and what you need to think about. We're going to talk about the 4 key areas of consideration when setting up your RRIF account and some of the bigger picture implications on how you structure your RRIF. When you turn age 71 is the year that you're required to set your RRIF account up. It isn't until you're age 72 when you're required to start taking the income. So when you're setting up the account, the first thing of consideration is who the annuitant is. This is easy. It's your RRIF account. You're the annuitant. The next thing of consideration is if you want to name a successor annuitant. There's implications if you do name one or if you don't name one. You can only name your spouse or a common law partner as successor annuitant. If you do, what happens is upon your passing, your RRIF account will flow to the person that you're naming, which is your spouse or common law partner, and it will be a tax-free rollover. They will essentially inherit your investment account, all the investment holdings, and the income that you've chosen and set up for your own structure. This is the easiest way to transfer the money to your spouse from an administration point of view. If you want to have your spouse receive the income, but you don't name a successor annuitant, it's a lot more difficult from an administration point of view. What essentially happens is the assets are sold, the account's closed, the money does flow to your spouse tax-free, only if they deposit the money to their RRIF or their RRSP, and they have to complete the tax filing appropriately. Because that amount of RRIF is actually going to show on their tax return as income, and you have to make sure you're doing an offsetting deduction. As spouses get older, this might become a bit more complicated, and if tax filing is not really understood well, it could lead to paying unnecessary taxes for your spouse. So if you do want your spouse to inherit the money, we often will always recommend to name a successor annuitant. The next area of consideration is the beneficiary. If you don't want your spouse to receive your RRIF for whatever reason, and you want to leave it to your kids, niece, nephew, family members, whoever it might be, you would not name a successor annuitant and you would just name a beneficiary. So a beneficiary can be named as anybody. You have to understand the tax implications, however, when you are naming a beneficiary. The other thing to note is you can't name a spouse as a successor annuitant and a child, for example, as a beneficiary, because really those are conflicting. You can't have them both inherit the money. It's going to flow to the spouse. Your spouse then can have their own beneficiary named on the RRIF account upon their passing. So this is how the tax works with regards to RRIFs. When the annuitant passes away, if there's no spouse to have the money roll over and it's going to a beneficiary such as a child, grandchild, niece, nephew, different family member, the RRIF is claimed 100% on the tax return on the year of the annuitant's death. So for example, if your RRIF is worth $500,000, there's $500,000 of income, and if for easy math, on average across Canada, 50% tax at that highest tax rate, you will pay the estate will pay $250,000 of tax on that RRIF. In subsequent videos, we will get into a couple strategies on how you can melt your RRIF down and how you can use other strategies in order to have money available to pay those taxes. The last area to consider is income. So when setting up your RRIF at age 71, you'll be asked if you want to use your age or your spouse's age. We typically recommend using the age that is younger. So how it works is the government has a schedule starting as early as age 55 that you're required to take a minimum amount out of your RRIF every year up until age 90 when the percentage withdrawn from the RRIF is 20%. So it's to your advantage to use an age that is younger so that you get to control your income. You're only forced to take a minimum amount from the RRIF, and then if you want more income, you can choose up to any maximum amount from the RRIF account. So those are the key features to think about when setting up your RRIF: the annuitant, the successor annuitant, who the beneficiary will be, and how to structure the income. In subsequent videos, we will talk about some strategies in order to help you melt down your RRIF and also to help you with the taxes that you will pay upon your death.